So it's 1 o'clock. Let's get started. Can you all hear me nice and clear? Awesome. So most of you are on mute. If you have any questions, please feel free to put it in the chat. Type it up in the chat. We have guys watching the chat to feedback the questions. I'm watching the chat as well. If it's easier, then we might unmute you or turn your video on so that we can get your questions from there as well. I'm really happy for this webinar today. We have quite a number more speakers. We have quite a number of more attendees as well. So welcome you all to this webinar. We look to grow this number even further from today, from this week onwards. This might be a good sign of what's to come. So I'm Jin from LCMS Traders. I'll be pretty much managing this whole thing. I'll be giving you my views on topics of what we'll be talking about and how we're looking at the markets coming up in terms of the current situations and what might happen in the future. We have Jonathan there. Jonathan, put up your hand. Jonathan's there, who will be giving you a brief view of what happened in the market previous week, what happened last week, on the analysis that we wrote and the market updates. We have Daniel. Daniel, hands up. Daniel will be giving you some feedback and some analysis of the signals that he's been doing last week, picking out a few of his favorite signals, and also giving an analysis of why he got into a trade, why he got out of a trade in the analysis. Kenneth is here to share his views of the market and how he's been looking at reaching out to his clients in Forex Briefcase. We have Scott over there in Australia. Scott will come in talking about his favorite pairs that he's been looking at in the markets as well, previous week and also what's coming up. So, and then I'll throw in my bits and pieces as everyone goes through their parts. I see some videos, I see people coming in as well, so we'll just keep adding people in. Let's get started. Good to go? Yeah, awesome. So just a reminder again, this webinar is being recorded. So no cursing, no swearing. I did not, we have to censor you out. Let's start with Jonathan.
Hey guys. Yeah, it's been a while. I hope you guys are not getting bored at home while at the same time staying safe from the current situation. Anyway, I'm going to bring to you guys a brief summary of what has been going on in the market the last week. Okay, and again, just like my opening statement, it is all centralizing around the virus outbreak that is spreading across the world. Okay, just to start off, most major countries, okay, have taken extra steps to actually prepare and their economies for how badly they're going to be hit. Okay, first off, the Reserve Bank of New Zealand, okay, actually started a large-scale asset purchase program, okay, of a total of $30 billion. Okay, the Australian side as well, okay, announced a stimulus package, $189 billion Aussie. And in the Bank of Canada most recently actually went for a third round of interest rate cuts, okay, of 0.5%, okay, from the previous 0.75 to now 0.25%. And of course, the UK has also went into a lockdown. So yeah, these are the updates from these countries over the last week, the actions taken by the governments and central banks. Okay, however, despite that, these actions have not really translated directly into the prices of these individual currencies. Okay, why? Because actually our focus is mainly on the US. Okay, the US actually weakened greatly in the last week. okay, in comparison. So relatively, the impact on the US dollar is much worse than the other pairs. Hence, this move actually took precedence over the other weakening pairs. Okay, US also reached agreement on a $2 trillion stimulus plan, okay, causing people to have a bit of a risk-on mentality because it just shows how much of an impact they are expecting from this. And as we know now, US, the cases have been increasing tremendously, okay, over the last 2 weeks. So it does cause some uncertainty and panic among investors or anyone that's involved. Okay, they actually, based on this, okay, we also can see that they actually forecast that the result of this impact to be worse than people expect. Okay, and this has actually also translated into data and numbers. So let me just share my screen with you. Okay, if you look at Forex Factory, okay, last week, Thursday, we look at the unemployment claims. Okay, you see that the previous unemployment number was about 282,000. Okay, and it was expected to increase to 1.6 million. But in the end, the data was released about almost 2.5 times that amount, okay, which actually shows that the impact was far greater than expected by everybody. Okay, and this actually caused the USD to be started weakening. And let me bring you to the charts. Okay, we're just going to look at some of the major pairs that we trade. Okay, starting with the pound. Okay, we're looking at the H4 chart here. Maybe I'll just go to the daily so that this just simplifies things for you guys. You can see that, you know, although the pound, okay, has been weakening for the last week, okay, due to their own situation in their country, it has recently rebounded. Okay, over here, approximately about, you know, 800 over pips, and it looks like it's still going to head up further depending on the upcoming information we have. Okay, euro, okay, same pattern here. Okay, after weakening, you see that
John, we can't see your chart, sorry.
Oh.
I think you have to drag it into the same window. Yeah, there you go. Yep, that's good.
Okay, so you didn't see the pound as well, right?
No.
Okay, so I'll just go one more time. Okay, you see the pound recently has gone up. Okay, this is this week. Okay, 800 over pips, and from the last week where it came down. Okay, euro had a similar pattern. Okay, coming down at first, and now due to these recent developments in the US, has also started to rebound. Okay, I will just show you. I won't really go through because it's the same situation on all majors. Okay, Australia going up as well. Same as the Kiwi. Okay, CAD, also US CAD also weakened, despite that Canadian also has cut their rates. So you can see that the situation in the US still, you know, takes a higher precedence over the Canadian rate cut. And of course, we have the yen, okay, also dropping greatly as people, you know, want the whole safe haven currency at the same time with the weak US dollar. Okay, so these lines, okay, that you see here I have on the charts are actually more on a bigger time frame, drawn on a bigger time frame. They may not look exactly like what you have on your screen, as most of you probably draw on a 4-hour chart or even lesser. Okay, but let me bring you to...
Sorry, before you get into that, John, I want to add some points.
Sure.
You know, what we've seen in the US unemployment numbers being 3 point something million unemployment numbers, and we've seen the market react quite strongly to this, with a US dollar weakening significantly, bouncing off the multi-year lows. I don't actually, personally, I don't feel that this is going to be a very sustained move, because what happened, I feel, is that it was on a multi-year low. So a lot of people were reacting very aggressively to news of a high unemployment number in the US, of unemployment claims in the US. But, logically looking at it, people have not been working, and this is a weekly number. We have not been working because they've been on quarantine, they've been on stay home isolation. So I don't feel that this is a structural kind of unemployment numbers. This is more a sudden, it's more like as if there was a strike, as if there was a bad weather. This is some situation where people had to stay home and not work. So I see that it's gone up. The US dollar has weakened, it's gone up quite significantly, but given any next news that happen that could affect the market, we could actually see this coming down quite strongly again. Okay, so just wanted to add to that point, just to be careful if you're going to keep thinking that it's going to keep going up. We might actually look at it as a short-term reversal towards a longer-term downward move again. Anything else to add, John?
Yeah, so thanks, Jean. I think that will be very helpful for future trading ideas and approach for the students. Okay, just the last thing I want to add is in case you guys need help, okay, with your support resistance lines, you can actually head to our blog, Forex Trading Asia. On the daily updates, you can see charts of the major pairs and some write-ups on that. On a daily basis, if you click and expand the chart, you can actually refer to the lines drawn that are on a more detailed and lower time frame, which could be more suitable for your trading. So yep, I think that's about it. That's all I have to share. The updates for last week. Please go to the blog for more frequent updates, and hope and you enjoy the rest of the sharing.
Awesome, thanks for that. Okay, so now I'll move on to Daniel with his sharing of the trade signals that he's been sending out last week. Take it away, Daniel.
Oh, okay. Hi, everybody. Hope everybody's great. Last week was not a really good week for me. I only sent three trades signals out, but I will send more better the next time. Okay, just give me a minute. Let me share my screen. Okay. I hope everybody can see my screen.
Yep.
Okay, great. So let me share my trading views, trading itself. Okay, so you will notice that I have put it instead of trading view into MT4 so that everybody can see what I'm looking at, and you will be seeing the same thing roughly as well. So first off, on the 25th of March, August, for Australian yen trade idea, what I had was, when I was looking at my charts, I was planning, it's actually an uptrend, okay? And when a lot of them were that during that time on the 25th of March, previously already have a lot of people have very optimistic view that the US massive stimulus package will come to agreement, and it did actually. And the market's participant was really going on the risk on, which means that they're willing to take more risk, expecting the stimulus package to come. So a lot of the yen and US trade, like safe haven kind of currency, was expected to weaken a little. So you can see it's overall is an uptrend. Okay, there's an uptrend here itself, and it actually broken my resistance level of 67.1. Okay, it's a 67.1, and it was looking to go up, and so at a 67.3, after it hit out my zone, I issued a signal to buy. Okay.
Cool. How did that go?
And then so then what happened was this. So that was previously was on the 1 hour chart I was reviewing. So this is a 5-minute chart. Just want to show you because the action was pretty fast actually. So you can see this was the trade I entered when it broke out. It did go back into the zone itself, but of course, as we learn, this zone is expected for fluctuation, so no worries itself. Okay, and then it actually shoot up quickly. So you can see how many candles, 1, 2, 3, 4, 5 candles itself, and it went to hit the TP1. So it's pretty amazing itself. And actually, personally, what I did was I actually exited out within the TP1 to here about 22, 23 pips itself, because in a 5-minute chart, it went above the Bollinger Band. And you see the 1 hour chart. I was looking at 1 hour chart as well. It actually it was shooting up and down itself. You can see here, right? So I decided to just exit it out around 22, 23 pips itself, because it was Bollinger Band. I was expecting it to come back down in the Bollinger Band itself. And in fact, later part, you see it actually went down, further down itself. So you can see that the highest we actually reached is 67.698. TP2 was 67.7. So so if anybody, hopefully you could get it out. It didn't wait for the TP2 to reach. It didn't itself. It missed by 0.02 pips itself. So unfortunately, so I have to only claim at TP1 itself, which hopefully everybody got the trades in and got some profits out. Okay. Now,
Daniel, if I can interrupt you, instead of
yes.
going through the next trade, why not just take us through your most recent signal, the Euro Pound? You just fired that one out.
Okay, sure. Let me stop this sharing, and let me try to share my charts then. Give me a minute. So this one. Give me a minute. Okay. Is my okay? Here it is. Okay, this is my chart itself. This is the Euro Pound. So you can see at the 1 hour chart right now, it's on the downtrend itself. I have this called, it broke through previously last week. Actually broke down. It broke down my support, become a resistance itself. And I'm looking at it seems to be continuing the trend to go down itself. So you can see that it's actually going to turn down itself. The MACD is within the Bollinger Band, and I expected it to drop. So I was looking at a little bit of the candlestick itself, and there's a drop below here. So I think it's a sell trade. So if you look at here itself, okay, previously it was here. The Bollinger, the MACD 15 minutes was cut in itself. You can see this candle. It's here. So it crossed. So I decided to give a signal in, working at a long-term trend as a down. So I decided to do a sell trade.
Great.
Okay.
So just to add on to that, you see in this chart, we're looking at, although you might not always find a perfect H1 trade, just trying to catch the small, shorter term moves. You can see that, like for Daniel, when he signals, he's got his entry, he's got his stop loss, he's got his take profit. His take profit doesn't go to 60. His take profit is at 20, if I'm not wrong there.
Yes.
It's at 20 pips. So it's really managing that trade, whether, and we know with the hit rates in the signals, even at a 30 to 20 pips, 30 pip stop loss or 20 pip take profit level is also quite reasonable. Not the best, but it's also a reasonable level to set at. So this is something that you want to consider when you are looking at the trade signals that we've been firing out. Something to manage. You can do a click, set and forget kind of method, but it's also you can also look at it as a trade that you want to manage as well. Looking at the Euro, why I was keen to get Daniel to speak about the Euro Pound is also because with the Euro Pound movements, we could see quite significant movements in the pound, which would lead to the Euro Pound. So I think this might be quite an interesting pair to be looking at over the next couple of days as well. Thanks for that, Daniel.
Okay, no problem. So yeah, you hear Gene. Okay, so that we are looking forward to that trade as well. So let me just quickly do one euro yen on the 26th of March. This one was pretty evening. It was in the evening when I sent out the signal itself. Basically, there were a lot of bad news. I think I shared this a little bit on the Facebook as well. This what's that? LCMS Traders
we
Club.
can't see the PowerPoint.
Oh, okay. So give me a minute. Let me share back that thing. I think what happens is share. Yeah. Okay. Can you guys see it now?
Yep.
Yeah. Okay. So this is very interesting. I did share it in the LCMS Traders. Somebody asked Traders Club in the Facebook. So if anybody is not in it, please go and join it itself. There's got a lot of things there happening right now. So there were a lot of recently a lot of bad news, especially last week from the Europe side, where Italy had a lot of casualties itself, France as well, and Germany, a few other countries as well. So I was looking at it, and I feel that the European economy is going to be impacted very severely. So I was looking for euro to be weakened, and indeed waiting for it to happen. So also you heard from Jonathan that a lot of central banks actually issued a lot of fiscal policies, I think monetary policies as well, and I think not a lot of things are still not happening. So a lot of safe haven currencies I expected still to be stronger, like US or yen as well. So I was looking at selling at euro yen, and I was looking at this trade itself. The 1 hour chart was an uptrend indeed. It actually was going up. It actually went up itself, and then it hit this resistance, this very strong resistance of 121.00 itself. I was watching for it, watching it on and off on the day itself, and indeed it reached there, and it actually bounced off, and it bounced off quite strongly itself. So this was in the evening, so I wanted to give a signal trade around here, but I missed it. Okay, and then I missed it, and then by the time I saw the trade itself, it was around here. The euro yen I was monitoring, and actually was going up. So I was looking at which point whether there's a strong candle price action itself, there will be going down to show me that indeed there's going to be a continuous bounce, and this trade will go in. And I did saw it in this candle itself as it went down to 120.4. I about this below this candle itself. I said that I was looking at it and I was waiting. When it goes to 120.4, I will do a sell trade, and that's what I did, a signal. Okay, so that's what I did. And you look at this 15-minute chart. This is where I did the sell, and then it will continue to go. It went down, and then it went up. So, but then I just left it there. No, within the Bollinger Band of the 15-minute chart. So I didn't do anyway. It's normal fluctuation, and it actually went down to TP1 itself. Okay, and then you either can get out or maintain inside itself, because if you see the 1 hour chart itself, it bounced off, and actually for this TP1 here is this candle. Okay, if you can see this candle, it actually shoots out of the Bollinger Band before it goes back in itself. Truth to be told, I was monitoring this chart in the evening, so I was going to have dinner. I want to have a good dinner, so I look at it 20 minutes out of Bollinger Band. I decided to, hey, why not just close the trade as well? But if you look at it, the closing is actually just at the Bollinger Band, so actually you could actually hold on to it. But and then the second candle of the 1 hour chart, you can see it's going to shoot even further out of the Bollinger Band, actually hits the TP2. So usually my advice is, if you do see this one itself, you don't see a very, how to say, the Bollinger Band is opening very, very wide itself. It's out of Bollinger Band. Why not just give it a close? I think it's a good idea to close itself when you see this. This kind of out of Bollinger Band, because again, you will expect the candles to price to go back into the Bollinger Band, and indeed you see it did go back to Bollinger Band. Unfortunately, it hits the stop loss, the TP, the stop loss of the 30 pips itself, and overall it still went up, continued to go down later itself. But overall hit TP2, and I'm explaining how do you think or review your trades, or when you would like to get out, which is best to do. Okay. So if you have any questions, you can go ahead and ask here, or you can also ask on the LCMS Traders Club. Okay, on the Facebook, just give your questions, anything, and I will on Signals. I will try to answer you as soon as I can.
Awesome. Thanks for that, Daniel.
Yeah.
So what you've seen here, one reason why we're quite keen to do this webinar as well is we really get to share everybody's view. You know, we got previous market analysis. I'll give you my tips and my ideas as we go through the conversations. Daniel has the 20, 40, 60 pip kind of trade ideas, you know, get out quite quickly, react to the markets. I want to head over to Scott now, where I think Scott, why I'm quite keen to have Scott on this chat as well is also because he gives a bit of a longer term view, a bigger view of where the market's heads in the overall sense. I was quite happy with our analysis last week about gold as well, how it played out quite similar to what we were expecting. So let me unmute Scott now. Off you go, buddy.
All right. Hi, everyone, and thank you, Jin, for having me back on, and welcome to the new participants as well. All right, I'll just share my screen now. I've got just a couple of thoughts that I'm going to go over. So what I think I will touch upon first is, let's do the USD yen first. So there's been discussions about risk sentiment, and obviously with the coronavirus escalating, especially in the US, it seems that, you know, we won't get into a political discussion here, but, you know, Donald Trump was a little hesitant to, you know, act when really it was probably necessary. And, you know, Singapore and China and everyone sort of really, you know, acted very fast and aggressively, and that was effective, but he thought otherwise. And you can see that reflected in the chart. You know, if we just have a look at this, we'll go to the 4-hour time frame. I sort of like to look from 4-hour onwards, honestly, with my time frames, and it's bouncing a little bit, but I see today as a very interesting point in the market where let's just see what the US dollar wants to do. I mean, obviously we can all agree that all the economies are under a lot of duress right now, because of just, it's an unprecedented situation where everyone has to stay inside. A lot of people can't work. You know, the airline industry is, you know, falling to pieces, and, you know, government bailouts might be inevitable, because there's so much money involved in airline industries, just with, you know, all the debt they take on as well for the aircraft. And it's a situation where it's risk sentiment is quite interesting, and it's fallen a lot, the USD yen, but there is still a little bit of room to go, I see. But I'll use today as a little bit of a perspective on what the market wants to do, because it's been a little irrational, we've seen, with moves. And I think you mentioned, Jim, the short-term perspective of reversals, and I agree. We saw that in the Aussie dollar as well. It's just, it was so low. It was historically low. Like, it was 2002 lows in the Aussie dollar. Obviously, there's going to be individuals, you know, looking to buy that. They just, they can't. And they did aggressively. And we'll see now if there's a turning point. I see this week as a point of interest where, for traders like myself, where we'll be looking to see, we'll see if the bounce sustains it. But I have the view that it won't, but I do what the market tells me. Like, if it does continue to rally, we'll see. It might be worth buying, but I mean, it's gonna have to take quite a lot to convince me that it's a sustained bounce, given, you know, the situation that we have, because especially the US economy is really now under, you know, they can only juggle so much. I mean, it's going to get the reality will hit soon. There'll be bankrupt companies. It's going to be bailouts. People are going to be like, you have to help me. And then Donald Trump announced as well, they won't be opening up in 2 weeks, because I saw him say, you know, they're going to open up before that.
I think if I'm not wrong, they've extended it to the 30th of April as well right now. Yeah,
that's correct. So it's going to be interesting. So I'll touch upon that, and let's go to the S&P 500 now as well. So we've got to take a little bit of perspective. I didn't play. I know some traders that I follow on Twitter. They like to take a risk-off portfolio over the weekend to play the gap downs in the indices. I didn't do that. I'm not comfortable enough to do that, to be honest. But if you have an account size, you could potentially there's been a few times where it has gap down. So that's something to look out for as well. I won't, talk too much. I mean, that's just a perspective that I have. But it's just something to watch. Even if you don't trade the indices, it gives you a gauge on the sentiment, and just if there's panic selling in the S&P 500, then there could be potentially panic elsewhere. So you've got to be careful then. If that's the case, and if you're looking to trade, maybe now is the time not to participate, because what will happen is there'll be irrational moves in the market. There'll be big wicks. Things just get chaotic, and I try and avoid, jumping in when things are a little bit chaotic. That's just my take on the situation.
If I can jump in here, what I get a lot of questions about how the index relates to currency movements. If I ask this to everyone, you can put it in the chat as well, these guys with the videos on can chime in. What's your view? Do you feel that as index goes down, currencies get stronger, or is it a inverse relationship, or is it an inline relationship? Index is inverse to currency, or does index follow currency? What do you think?
Look, that's a very good question. What I've seen is that, so as equity markets are sold off, so if the S&P 500 goes down aggressively, it looks like every other equity market does as well. And that we've seen that the US dollar sort of rallied on that because no one knew where to put their money. They didn't want to put it in gold because they were getting margin call. It was just such a panic that was what we saw. But now we've seen a little bit of a shift because, the coronavirus has really run rampant in America. So now we're seeing, it sort of looks like US is going down and the indices are going down. But there was a bounce. In when, the quantitative easing was just the trillions of dollars was approved. So it sort of seems like it's an inverse relationship right now. But things are definitely changing a great deal. And they're so fast. Like if you just stick to what you know all the time, it can get a little frustrating because you think gold is going to rally when equity markets are down, but we haven't seen that really. It is up on the year, but it's certainly not running, great. Like have massive 200, dollar candles on a daily chart. It's just like very frustrating. So that's what I would say to that.
My view on how the index to currency is usually inverse. So usually when you see index dropping, you see the currency getting stronger. But right now we're looking at everything dropping. Currencies are affected by the virus. Index is affected by the virus as well. So I just want to really hone in on that point to everyone. It's usually that would happen, but in a situation where it's not usual, it's not always the same case that's going to happen. So really be careful. I really want you to avoid going, index is dropping, let me just keep buying, or index is rising, let me just keep selling on the currency side. So try and really analyze each instrument as it plays out on its own, rather than trying to draw that relationship too closely.
Yeah, I agree. You've got to be flexible. That's a very good point, Jen. And I was just sort of scanning through gold as well, and it's a little bit of, it's stable somewhat, but we'll see now where it wants to go. So
I'll put if you can hold that chart there on gold. I'll try and run a poll now. What do you think? And I'll put it through to all the guys who just spoke as well. What do you think? We're at 1615 now. Are we more likely to head towards 1700, or are we more likely to head towards 1500? Daniel, what do you think? And why? What do you think and why?
I think people will still gold will still go up to maybe 1700. People will, when they panic, they will still buy gold. In fact, I was just looking at a report I'm not sure where.
Okay,
where
I'm gonna keep it short and sharp. So you think
Okay.
1700, and
Yeah.
because demand is still going to be there.
Yes.
Okay, great. Jonathan, which one do you think and why? One quick line. You got to unmute yourself. Hang on. Okay, I got you.
Are we good?
Yep.
Yeah, actually, I think we're just going to be staying here for a bit while developments unfold. But yeah, like still think there's more potential on the upside.
So you think options 3 not moving that much, but in the future we're moving towards 1700.
Yes, correct.
Okay, good. Kenneth, you've been quiet. Let me put you on the spot. Go.
Okay, I think my thought will be going down as the panic and everything is currently going on. People will just feel unsafe to buy anything, even on gold, and just keep more cash for themselves for waiting for the opportunity to come again.
Okay, great. Short and sharp. So last, Scott, what do you think?
Look, I sort of tend to agree with Jonathan. I think it's just going to creep higher. I don't think we're going to see like a dramatic sell-off, and I'm going to, towards 1700. Slow, long-term sort of grind is what I'm saying.
Okay. I'll take the contrarian view. You know, I actually think I have to, right? So I actually think that it might actually be a slow grind downwards. You know, we see that it shot up quite quickly. It tried coming down, and then it hit about the 1.5 level, and then it shot straight back up, sitting there a bit now. I think that we might see people not think of gold as a perfect hedge, and then we might see the demand for gold slowly taper, and then it starts coming down again. I'll be quite happy to follow up on this idea because we have quite a split view of what's going to happen. So we'll keep revisiting this gold idea as well. So last one, Scott, what else do you have to share with us?
Look, I'll just touch upon the euro as well. Obviously, that's a very, well-traded currency. And we discussed this last week about going long as well. And I didn't actually take the position. And it did, this is the daily chart. So it ended up running a little bit, quite a little bit. And now really where we are, if I go to the 4 hour, we'll just see what it's been doing just to start the week. And it sort of looks to be cooling off somewhat. So we'll see. It's really interesting with the euro US dollar because you've got the European situation with Spain and Italy. Things are really not great right now for them. And then obviously in the US, but I see the US, it just seems to be the go-to currency in situations like this. So I see the euro probably longer term coming back down again. This has been a bounce, but it was sold off quite heavily as well. So I see this, but again, I can change my bias if that isn't the situation. But I just see overwhelmingly there's more pushing the euro lower than the US. The US just seems to somehow come out on top most times. It's just how they end up doing it. So, and the European economy was fragile even before all this. So that's my sort of take on the euro. So I'll just keep it short and sweet with that. I would just say there's no real entry for me here, but definitely the euro is looking, like it could.
If I could add to that, I follow your train of thought. The euro hasn't been doing very well. There was a good bounce back up now. Somehow the US always seems to come out ahead. We spoke about this last week as well, where the US always is actually strengthening in relative terms. They're not actually strengthening because they are stronger, but in relative to everyone else, they are strengthening. So I am still looking at a sell on the euro trade. Perhaps if it breaks below this 1.10 level, breaks strongly below this 1.10 level, we could see it hit quite lower as well.
That's right. Yeah, I agree. So those are my thoughts currently and what I'm sort of really, looking at. So we'll see what the week brings for us.
Good. We're having quite a good discussion in the group chat as well. So I'm splitting my attention between the videos and the group chats as well. So we might try and in the future get more of you guys contributing in terms of your trade ideas and also your viewpoints into this webinar. I don't know whether I've preempted Robbie about this, but I want to put Robbie on the spot to get him to share some of his trade ideas and his views. I spoke with Robbie last week about leading the trading competition. He's still leading right now. With one more day to go, I think he might end up winning. So I want to hear from this month's current leader and potential winner. Hi, Robbie. How are you?
Hi, Jane. Hi, guys. I'm fine. How are you?
Good.
So yeah, I haven't really looked at the charts this morning. I just I did errands this morning, so I just got back and yeah, I joined the 1 p.m. conference.
Okay.
So
So I'll put you on the spot. I just wanted to maybe catch up since our last conversation. Did that, and I published the call that we had as well. Did it help you in terms of clearing your trade ideas and how you structure your day?
Yeah, it helped a lot. Basically, it's more on the psychological part of trading, right? Yeah, it really helped a lot. Now I just focus on my target percentage of profit.
Good.
Yeah, basically that's it.
Okay, I know I put you on the spot as well. So I wanted to. Whoa, someone's motorbike is going through. I just wanted to check with you to make sure that to really remind you, you're almost at the finish line. Just make sure you trade properly. I really hope you win. Don't let Daniel catch up.
Yeah.
All right. Okay. Any last questions? The next person who puts in a question on the chat, I'll answer, and then we'll call it a day on this webinar. Any last questions in the chat group? I see a few of you chatting away. Anyone else? Calling once. Calling twice. Will there be another wave? Roy asks, will there be another wave? Another wave of what, Roy? Can we unmute Roy and get him to speak? Where's Roy?
Hello, guys.
Yes, Roy. Hi.
Yeah, I was just asking, because the last time that it fell, right, it was quite a drastic drop. So I'm wondering whether are they just consolidating now and then is it going to catch its breath and then carry on the next move next week?
Okay, so I think you're asking about the US dollar, right?
Yeah, that's right.
Okay, so what do you guys think? I mean, again, out to all the our panel, I'll call you guys a panel from now on. What do you think? Is the US dollar going to have another wave down or towards another wave stronger or another wave weaker? What do you think? Short-term reversal or full-on reversal? Let's start with Scott then. One word answer or one sentence answer.
Short-term reversal. That's what. Yep.
Short-term reversal. Okay. Jonathan.
I think we are still going to look at short-term weakening for the US.
Short. So you think it's going to continue moving up a little bit more before maybe coming back down again?
Yeah.
Okay. Kenneth.
I feel that the US will be like staying at this level, not moving everywhere, just ranging across until a big impact news comes in again.
Okay, great. Daniel?
I'm going to think that it's going to fluctuate around this range, but overall US dollar will still strengthen.
Fantastic. So there we have it, Roy, your questions, and we've got all three possible answers. It's going to stay there for a while before it goes up, or it's going to stay there for a while before it comes down, or it could just stay there for a medium term. I know you have not got your answer. We have given you all possible scenarios. At this point, in a more serious note, at this point, it's really maintaining that flexibility, you know. Don't have a preconceived notion of whether it should be going up or it should be going down. You know, remember that when you're trading, you're looking at it as a reaction. You're going to go, hey, it's moving up. Can I get in for a short term? Can I do some small buys while I think it might be coming down in the future? Or if it's going down, can I keep selling a little bit? Maybe it's going to shoot back up again. So maintain that flexibility, you know, trade in the, I always encourage all my students and you guys especially to trade in the shorter term, in a period of high volatility, trade shorter term. Don't try and hold on to trades for too long, because you see that one small little news comes out, you get stopped out. So do that little shorter term trades, but then we always have these webinars on a weekly basis. We have our trade ideas. We have a lot of discussions happening in the private LCMS groups as well to keep you updated of what's happening. So, you know, react to the moves, but also trade in the shorter term. Realize your profits. You don't lose money by realizing your profits. You lose money when you hold on to potential and then don't get out. And then when it comes to a loss, you get out. So on that note, I think that's a perfect note to, if we end this this webinar today. You know, you make money by realizing profits. Take it and go, accumulate your profits. That's where you see your sustainability, you see the consistent returns that you achieve in your overall trading. All right. So thank you all. This has been a great turnout for this webinar. I hope to see you all and more people join in the next week's session as well. Take note, this Friday, there is going to be a US non-farm employment number releasing at 8:30 p.m. Is it going to move the market? I can tell you it will, because is the number going to be good or bad? Hands up for good. Well, no one's got the hands up, see? So it's going to be terrible. It's going to be a terrible number. We're going to see possibly US reacting very badly, US dollar reacting very badly to that number. But it could also mean that it's a very bad reaction with a more logical return reversal after that as well. Okay, so trade safe all the way up to this news. Remember, April starts. There's a new competition. So Robbie might be the winner this month. I hope you're the winner next month. I hope anyone else is the winner next month. All right. Thank you all again. We'll catch up with you at the next webinar. Thanks. Yeah. Bye.